Welcome to another Around the Coin podcast. Today's guest is Ziv Keinan, the founder and CEO of Simetria. Simetria is building a secondary market solution to allow people to trade secondary shares in private companies. We talked about how the public markets work behind the scenes, the technology they use, the complexities of regulation across different countries, how you should think about investing in public companies versus private companies, and why and how the secondary market is effectively booming because the private market of companies is ballooning. The public markets are effectively stagnant. There hasn't been IPO in a while. The IPO market has dried up. And so as a result, one of the largest, if not the largest challenge in the financial industry is what to do. How do you grow liquidity in the private markets when no companies are going public? So we talked about in great detail. Ziv has an awesome background and is perfectly suited to speak about these topics as he's previously led legal and other really successful financial companies. So I hope you enjoy this conversation. If you do, please share it or give us a thumbs up, subscribe wherever you're listening. And without further ado, here is Ziv Keinan. All right. Ziv, well, I'm excited to dive in with you and talk to you a bit more about the world, what you're working on, thoughts on, we were speaking a little bit about universal basic income. I'd love to, before we even dive into any of that, I'd love to get a quick arc of your career. You mentioned a few really interesting and unique occupations you've had before starting what you're currently working on. Do you want to just highlight for me a couple of the more interesting and educational roles that you've had throughout your career?
Yeah. Thanks, Mike, for having me today on this show. Such an amazing opportunity, and I really appreciate it. So I started my career as a lawyer, as a corporate and securities lawyer. And at a certain point, I decided that I want to break free and start my own practice and do things that I love. And in 2017, I started a law firm that was focused on blockchain technology and cybersecurity, but it later very quickly became like a blockchain technology. And we had like an Israeli, a US office, and we've done two things. First is we work with companies that want to implement blockchain technology in like real world assets. In 2017, there were Securitize and there were some other Harbor and other that were Polymath that was active in this space. It was called at the time Security Token. And so we helped those guys. We have companies that wanted to run an STO, a compliant offering of tokens. And we also helped companies that were doing something which is related to social good and blockchain technology. And there was a notion at the time that blockchain technology can release a lot of social good. It could generate equality. Maybe today, after FTX, blockchain is associated with something else. But I can tell you, like, for us, the generation of 2017, the blockchain is still a tool for equality. And that led me, so I've worked with several of those startups, some in Africa, trying to release like local coins, robotic type of product. And eventually that led me to work with a project by a company named eToro, which probably many listeners knows. Bless you. And they were sponsoring a universal basic income project with cryptocurrency. The project was still like very at the beginning when I joined. And it was the idea of the CEO of eToro named Yoni Asia, which wrote an article about how economy can be transparent. Basically, it's called the visible hand. You can look it up. And I've joined this project, and today it's one of the largest DeFi projects in the world with a user all over the world. It's called the Good Dollar. My role there, I basically help provide the legal background for the company to launch and write the white paper. So I provided a legal opinion that was later adopted by a large office named Layton Watkins, the law office, and the project launched. And I think it's an interesting experiment. It's an experiment where there's a protocol, a compound protocol, which generates income, and donors has put some money into the protocol, and the income that's generated through this protocol is going into a reserve, which is backing a coin. So when you receive the UBI, there's actually some USDC or there's some currency that is actually backing it. So a really interesting experiment that can actually lead to, I think, in today's environment, when you can get interest on top of your shares, this experiment can actually materialize in real life as a universal basic income project.
So, interesting background. So let's talk a little bit about the world today. So 2023, mid 2023, we're recording this in July. You started in 2020 with Simetria, I believe. Where do you view the biggest challenges and maybe subsequently the biggest opportunities with cryptocurrency, not in any specific coins, but just with the general technology and impact on civilization? Certainly with some context here, the United States seems to be waffling whether or not it's going to even allow crypto regulation in the short term, which is a tragedy. You're based in Israel, which is a different set of priorities entirely. How do you see the industry evolving now, and where do you sort of see it going in the future?
So when you're building a startup, what you're looking for is pain. And I think that cryptocurrency would come in everywhere, or blockchain technology would come in everywhere where there's a big pain that needs to be solved. So before we spoke about universal basic income and equality, I think this is a really big problem that needs to be resolved. And I think that cryptocurrency can actually come into play. And we've seen experiment to the World Bank and World Food Program with blockchain technology. So definitely on the social impact side of things, I believe that blockchain can play a major role. The second is what we do, which is basically the rails where the financial system is working on is extremely, extremely old. If you go to a stock exchange, like most stock exchange, their system was built in somewhere in the 80s. They use a programming language named COBOL, and it hasn't been like renewed since. So there has to come like a new technology that replaces the old infrastructure. And what we've witnessed with cryptocurrency is that everything works really good in terms of the operational part, the way that you do settlement with those coins and the way that they transact. It's actually a great technology to represent shares, to represent stocks. And what we do, which is trying to unearth equity which is private and not traded, and give it value. Using it as an infrastructure for that could release an enormous amount of value. And I think that people start to see it in terms of like the cryptocurrency world, which we used to know until now. I think it's going to change. Bitcoin would remain a store of value, but then and maybe like the speculative aspect of some of the coin for some investor, you would still be appealing, but it's not going to be the way that it was until now. Yeah, it's not going to be as big as it was until now.
You mentioned COBOL as the primary technology for the financial infrastructure. Is that specifically for Israel? Like how does under the hood, how does the current financial infrastructural layer look? Is it quite US dominated and centric? Is it country by country? Like what are you sort of seeing?
It's country by country. There's amazing US products. NASDAQ is also a technology company that markets products, but it does not suit to all markets. US product has a very big problem. And if you're listening to this podcast, then, this could open like 100 million startups, because US products in many places where we're seeing are not compatible with other markets. So they're developed in Silicon Valley or in other places in the US, and it's very difficult to migrate them. So for example, like cap table management softwares, which develop in Silicon Valley, like Kata, Puli, whatever, are not compatible with other markets. So in Israeli companies would probably can use Kata, but it could never use any of its like high-level function, like signing and everything.
Why?
Because the software companies need to do some kind of compatibilities, need to do localization of their products, and they just don't do it. And they also have to go and speak a little bit with the regulators, like the tax authority, and ask, guys, like if we sign the warrant on our system, is it okay with you? So it's a simple question. They can do it. It's not much investment. But the fact is that eventually it's difficult. Like in Israel, there's a lot of funds. So there's a lot of high tech, there's a lot of investment, there's a lot of funds. And there was a large software company, which you probably know, that developed like a fund operational SaaS solution, which pulled out because they didn't want to handle all the localization aspect of working. And we've seen it all over again, where in India, for example, there was SCADA who tried to pull into India. They have their internal cap table solution named Capita. So the American products are not compatible in many cases. This is why they stay in the US. And in terms of like the infrastructure, the infrastructure is very heavy. So you have a trading system and you have a system that do settlement. It's a separate system. And you have brokers that trade and you have custodians. So those are all like different solutions. And in today's market, what you see in like digital securities exchange, and there's many of those, like there's ATS in the States, there's in the UK, there's one, there's in Singapore one, and there's in Germany, a digital securities exchange. So it's a trading platform using blockchain technology as an underlying solution. What you're seeing with those guys, they are everything at once. So they're the custodian, they're the settlement solution. So in the US, you have like US DTCC. They're also like their own DTCC. And they're also licensed to do custody on securities. They're all the levels at once. And one of the reasons where they can do all of this is that they rely on a single ledger. They rely on a blockchain ledger, which is a source of truth, which if you settle the transaction is settled immediately through an atomic swap, for example. Yeah. And then you actually don't need all this additional infrastructure.
Okay, so you're saying that that there seems to be an increasing trend on financial products that are focusing nationally. So would it be true to say that financial software products as a class or a sector are becoming more nationalized, less global? You give a few references there with Carta, and that it seems to be that regulation is the forcing function. It's not a US problem in particular. It's just that other countries seem to be capable now of having more sophisticated financial products. And so the need to bend the regulations per country is declining because India, Israel, maybe other countries have their own products. I would imagine that that's a function of what's available. Like, if there wasn't anything in India, for instance, or if India was smaller and didn't have anything, then they're just going to open up the gates more. Are you seeing that? Do you agree that this is a trend?
I'll tell you, it's difficult for me to understand why it's happening exactly. But what we found at Simetria is that if you take all the large cap companies, like the unicorns in the world, and you see like where they're from, you'll find out that 50% of all unicorns in the world are not US based. If you go to the 50% that are US based, there's about 1,200 unicorns. If you go to the 50% that are US based, you find that at least like half of them are not like US founders. They're either like Israeli, Indian, Australian founders. And those founders have a large development center in their homeland. So Israeli founders would usually have like a development center in Israel. And that means that if you're developing solutions to manage cap table or secondary solutions for those companies, like you have to take into account the localization aspect. Otherwise, you're looking at about 25% of the market. So as a cap table management company, for example, like you're looking only at a fraction of the market. You're losing the 100 unicorns in Israel and the 120 unicorns in India and the 100 unicorns in Europe. There's a lot of market which you're actually losing.
You mentioned a cap table company. I assume that's like the company you're working for at Simetria. But speaking more broadly, why would a company ever operate only locally? I assume the only reason they would do that is due to the lack of integration into the other countries. I mean, it takes time, it takes money, it takes attention to launch in different countries, and companies have limited resources. When we think of a company as being located in a country and listed on a stock exchange, maybe explain a little bit how that works. So if I'm a US company listed on NASDAQ, that means NASDAQ is operating or managing the ownership ledger for at least some part of the shares that are publicly traded for that company. If a company is on a Canadian stock exchange, for instance, and I, as a US citizen, try to purchase it on the Canadian stock exchange, what's happening? And then maybe even think about this as like more country by country. If a company is listed on a Indian stock exchange, can I purchase that company? Is there any risks associated with that? Like, as people think about investing outside the US more and more, what should people be thinking about and understand about how ownership works?
Yeah. So first of all, like, just want to make a small correction. We're not a cap table company. We're a secondary markets solution. So we have software that manage secondary events and a marketplace for secondary deals. And we decided not to pursue like the cap table management solution because we didn't think it was a solution to the problem which we're trying to solve, which is settlement. So
Okay.
that's about us. The way that stock exchange work is that stock exchange, when you're listing as a public company, you're actually moving the shares that's going to be created into an agent called, in the US, the transfer agent. And then those shares are going to be listed. So in the cap table of the company, you would see like 98% to the name of the transfer agent. And then those shares are going to be registered with a DTCC or with a settlement facility. And then it's going to go and be traded. And with every exchange in the world, there's a different settlement solution. Okay, like a settlement agency and a transfer agent. And the process of moving a share from one exchange to another is quite complicated. So it's not like blockchain where I sent you a token and you receive the token the minute after. But you have to delist those shares from one exchange and list them on another exchange. And there's agreement between the large exchanges about how this process is going to work. And it happens daily. And you see that there's like small arbitrage that have been created between different exchange. In the market which we work in, which is the private market, there's no settlement and there's no real solution for the way that assets are traded. So we can see like could be like large differences between the way that a SpaceX stock would be traded on one exchange, which is a private market, to another private market.
Okay, so just to lay this more simply, if I wanted to purchase a company that was on an Indian stock exchange, is there any like centralized place to go, or does this happen frequently? Like, should people
Usually
right now,
what
most
happens,
people are,
like,
yeah, go for it.
what happens usually with large cap companies, that there's a process called ADR. So you take a Chinese company that is trading in China and you just buy a bunch of stocks and you put them in a safe, and then you take those stocks and list them on a US exchange, and then you can list them you can trade Howie, for example, on the US exchange. Okay, you're buying like a big bunch of stock and then you list them, you put them in a safe and you list them on the US exchange. This is called ADR.
How about individuals? Do you see like individually wrapped companies? Like, could you take, say Simetria was public and listed in the Israel Stock Exchange? Like, is there a like a synthetic version where somebody buys 1 million shares of the company and then lists that value for sale on the NASDAQ? Does that ever happen? Like, individual company transfers in that way?
So,
you know what I'm saying?
Yeah, a company can list on two exchanges. It can list on the Israeli Stock Exchange and the NASDAQ at the same time. It means that some of its shares going to list on the Israeli Stock Exchange and some of its shares going to list on the NASDAQ. So yeah, it is possible. Yeah.
Interesting. But for the most part, the exposure that you would get would come through the form of like an ETL. So an organization, probably a brokerage, is purchasing a bunch of different stocks to represent a class, like, okay, Chinese real estate, right? And then they're buying it, maybe a few $1 billion worth of that, and then they're listing the value of the company that purchased that real estate on the NASDAQ. And that would
Exactly.
give you exposure indirectly to that particular market as a way of getting access to it.
Yeah, this is ADR. This is one of the solutions that is out there.
And that's from my take, that's fairly common. That's not new. What is new now is the world is becoming more connected, but also more separated at the same time. What area of finance is newly accessible to investors? Obviously, blockchain is a technology, but it's not necessarily something that enables new types or new innovative ways to invest. Like, does the question make sense? Do you see areas like obviously secondary markets are interesting, right? You have
Yeah.
this effectively this locked up value of shares that people own, and offering it to people
Mhm.
on a secondary market is really exciting because now you are effectively expanding the size of the publicly traded funds, right? Is that a good way to describe the purpose of a secondary market?
Yeah. Yeah. We need to talk about size before everything. So if you take at
Let's do it.
if you look at the private markets, the public markets are like this. You look at the private markets, they're like this. So this is like the size.
What is
If you
that?
take the
10 times
Apple in
bigger?
the world, it's 10 times bigger because at least, because like on the private markets, like the non-traded market, there's imagine like all the real estates, all the companies, including not only tech, but industrial companies, everything which is not traded. And the way that we structure regulation is that either you public and trade it, or there's nothing. So
Wow.
like if you're private, you don't have any trading facilities. The regulation is really relaxed if it's like accredited investors. So if you're public, then you need to disclose and you need to put like disclosures, like ongoing disclosure. If you're private, you don't have to put like almost anything. So there's like a high dichotomy between the private and the public market. And the private market is the big market, is the large market where most of the money is invested through. Yeah. Startups, for example, are private companies. And we know that in startups, we're giving like options to employees. And you can see that public companies are doing the same, right? They're doing like public companies are giving RSUs to employees, and private companies are giving like ESOP options to employees. But the employees of the public companies are looking at it very differently from the private companies. Because for the public company, if you're an employee and you receive like stock options, or like restricted shares, then it means that it's actually cash, right? You can cash it out. You can sell it on the market. But if you're working for this private company, even bigger than the public company, even if you're working for, like, let's say, the biggest public tech company that I know is the company that holds TikTok. Okay. So if you're working for them, for example, and you got like private shares, where can you sell it? What can you do with it? So employees of private companies tend to undervalue the equity that they're given. And therefore, also private companies need to give more equity to private companies. Right. In the public company, if you were saving up RSUs, like restricted
Right.
stock units, this is actually cash. You can actually
Okay.
calculate it into your
Yeah.
salary.
So why is that? Is that just, do you look at this as antiquated regulation that doesn't allow private companies to be public, or make the bar to go public so expensive and costly that very few are as a percentage of the market? And if so, what should be done? Should we ease regulations to allow companies to more freely access the public markets and open up the
Yeah.
market?
So I think that definitely it's regulation that hasn't been paying attention. So I'll give you an example. Right now, the public markets are closed. There's no IPO. Like if you go back in history, you need to go to 2015, 14 to witness this draft of IPO. No one is going public in the US, for example, and worldwide as well. So companies are not going public. It means that there's no more private companies, and the private companies are getting bigger. So they keep growing, getting bigger each
Why?
year.
Why is
And
that happening?
because a company produce like a cybersecurity solutions, and they're good. They're selling their products. So year after year, they're getting bigger. And what happens is that you see a market where there's a lot of fairly large private companies, and they have zero liquidity.
Why aren't they going? They should be going public, right? Why wouldn't they be going public?
They can't really, like the public market today does not offer them enough incentive to go public. You can put your money in the public market on a very like traditional dividend paying solution, or even like government bonds, and receive 6, 7, 9% year over year. So they're offering this, the incentive for companies to go public right now is really low. It means that there's more big, large companies, and those companies has needs. So when there was a small company of $100 million, they had an ESOP plan that was worth $10 million, about 10%. And now they're $1 billion company, their ESOP plan is $100 million. So it means that all of the 50 employees that were at the start now combine owned about $1 billion in value. So they need some kind of an exit. And let's start to speak about like the early investor in the company. They invested 15 years ago. They still didn't see like the money back, and they see all their friends investing in government bonds. So like, and doing this ongoing recurring revenues. So early investors want to exit as well. Growth investors, Tiger Global, the big, huge fund, just opened its entire portfolio to bids. So they want to exit as well. The growth investors, which invested for the company to go IPO, they want, their LPs want liquidity as well. So when we started this interview, I told you this is the biggest problem of the financial markets. And I insist on it, that it's the biggest problem of the financial markets. And I think that blockchain is part of the solution for this.
And so it seems like there's multiple problems when you parse into it. One is that there may be too much regulation to allow private companies to go public, and therefore it's too expensive for them to maintain the overhead of being public. There certainly seems to be some negative externalities of going public. You have to disclose your financials, which companies would prefer to not do, and other things like that. Mm-hmm. So there's some cost and there's some, call it downside to going public. I assume that when you say the public market IPOs have dried up, that it's because of a lack of public funding. So if a company were to go public, IPO, they're just not going to get as much money raised on the IPO as they once would. Is that the problem? Is there not enough money from public investors, or is there just too much regulation and cost to go public? Because I would think if you could just push a button and say, go public, most executives would push that button and just offer some percentage of the company to be traded. But the problem is there's so much cost and time and everything else.
First of all, it's a good question. Like this is a really good question. And why company go IPO? And I think the financial incentive is like the most important incentive here. And this is the question. Companies do not go IPO today because they don't have enough financial incentive. And that means that there's more companies staying private eventually, and they will remain, the situation is going to probably remain the way it is in the coming years. So it's not going to change. The private market is going to continue and grow.
I guess the thing I'm hung up on is I don't conceptually see a difference between private and public companies. So here's how I understand it, right? Like, tell me why this can't exist. You have 10 million shares in a company. The company has 10 people in it, and they're doing $1 million in revenue. They take 1 million of those shares and they list them on a public market. People can buy and sell, trade, do whatever they want. Now, scale that to 1,000 people, 10,000 people, 100,000 people in the company, 1 million, 10 million, 100 million, $1 billion of revenue. Why does anything need to change? Why can't a company go public at 10 people? Like what's the consideration on going public too early? Why did we even create this regulation in the first place?
First of all, I think compliance is a big thing. So in my past, I used to work with public companies. I think that, and you have to like really witness it. You have to live it to understand how painful regulation compliance could be. It has a really good reasoning. You don't want someone who's uninformed to buy stocks. And if you're marketing it to retail investors, which is like this housewife from Arizona, you want to make sure that she has access to all the information about the company. So this is a very just reason to have all the compliance. But what happened actually is that each generation adds its own regulation. So you start like with a very flat level of regulation, and then something happens, everyone happens. And then like you have additional layer of regulation. And then like there's a guy named Gary Gensler. He comes in, he says, we want to add additional regulation. And the bottom line result is that there's a lot of regulation on public companies. You have to actually be prepared to go public if you want to go public. And there's also a lot of expense. You have to pay minimum $1 million a year just to like lawyers, accountant, and so on. So you have to be financially prepared for it. And you also have all kind of governance within the company. So public companies behave differently. I think that the freedom that their CEO has is limited compared to private companies. So you've seen like Elon Musk being hammered about smoking a joint or putting tweets about going public, and the SEC going against him. And rightfully so. He's manipulated. He's potentially could manipulate the market with his tweets. So you have to be very careful about everything that you do as a public company. It's not a solution to many companies. And even in the best times of the public markets, many companies still do not IPO. Most of the company would stay private. Then the exit event would be either one of two: M&A, a merger, or a secondary. So, those are the two exit scenarios, the only exit scenarios for those companies.
And when you think of the word, when we say the word secondary, effectively referring to the private transfer, the transfer of privately listed company shares. And I almost think of when we say public versus private, to me, it's a bit of a misnomer. I think of NASDAQ and the Dow, like the organizations who list these companies public. Yes, they're available to individual retail investors, but they're effectively a stamp of approval. If you're listed publicly, you've gone through this $1 million legal certification. You have standard ways of reporting financial, gaps and all that stuff. There can be a secondary stamp of approval. It might say, okay, like there's this A stamp, and there's B stamp, and then there's C stamp, and then there's get it on your own, and there's no guarantee. Do you see secondaries market as just a stamp of approval that a company like the Simetria would put on a company to say, okay, we're going to not put the same overhead financially that we would if you were publicly traded, but we're still going to have some standard disclosure and standard process for listing your shares. You're not just letting any company come in. I'm sure there's some process to come in and become listed. To me, that's still, if it's accessible to retail investors, it's just different, which to me is much better. But maybe tell me, how do you sort of see the purpose of secondary and where it's going?
Yeah. So secondary is sort of transaction between a shareholder in the company, or a shareholder in the company, or sometimes it's an SPV. So they don't hold directly, but through an SPV, to another investor who buys the shares from the first investor. This is a secondary. It's like trading on a public market, just with private shares.
Right.
And those trade is done preliminary between accredited investors. So those are sophisticated investors that the law in the US and in other places in the world decided that if you have this amount of money or experience, then you can buy those shares, because we believe that you can hire the accountant, the lawyers, you can do your own DD and decide like whether to buy those shares or not. And I think this is actually a good solution. So I think it's a good solution. There's some that would say, yeah, but then like all the retailers do not get the same opportunities. So it's a good argument. And then we have to think about how you define who's accredited and who's not. Maybe you can take a test. And if you're like financially literate enough, you can actually buy those assets. And this is also a solution for someone who want to trade crypto in the US. Just take a test, prove that you're financially literate, like you understand what you're doing, and you know how to read like financial reports, and you'll be able to trade them. But today you have to have like a certain amount of money is one of the cases. And usually those investors, they're family funds, they're represented by bankers and brokers, and they do a due diligence on the assets which they purchase. And usually the company that, it is in our cases, most of the company that we work with, the company would put a lot of information out there to the buyer. Yeah. Because eventually the company understand that secondary is also the interest of the company. So they don't want to lock their employees into the shares of the company. So there's some level of cooperation always from the company, and sometimes even the company hires us. So for example, for us, when we started to look at this market, we saw that there's a lot of small sellers. They're running around and they're looking for someone to buy the shares from them. And usually they would go to a broker and say, can you find me someone who would buy the shares for me? And then they would go back to the company and say, guys, like, let me sell my shares, and can you please like provide some information to the buyer? And we found that this way that it works is like so cumbersome.
It seems like an old school market.
Ages. Yeah, it's like take ages, and until the transaction is set at the time. So what we do, we built a solution where the company has a platform within the company, and it can open a window once every year, for example, and allow everybody in the company to sell. So they would source liquidity from the market. They would find someone who want to buy $50 million of the company shares. They would communicate it back to their employees, and voila, once a year, everybody in the company can sell some of their shares and meet money.
I would think that even to have it once a year seems like an inefficiency. That should just be available to sell on a secondary market anytime.
Yeah. This is also a solution, but providing a windows where a sell can happen is, I think, from the way that we know about how this market works and manage, I think it's a good solution. We also have a demo of a solution where the employee in the company can communicate with a trading platform and can see how much the shares are trading on the secondary market, decide to tap into this market and sell directly to the buyers, or either put like an ad, a notice in the market saying, I'm selling at this price. So we also designed a product like this, but we didn't find any demand currently for this type of a solution. And the demand that we found was more like an organized company event. It's called like a sponsored secondary. The company would say, when you join the company as an engineer, just know that twice a year, we're opening trading windows. We'll give you some disclosure about what the company worth and so on. And then if you like, you can sell some of the equity and actually make money.
So given the fact that the private market is 10 times bigger than the public market, and that most retail investors, even accredited investors, spend a lot of money in the public markets, I would assume that the private market pent-up demand is huge, that there should be, like when I think about, okay, as an accredited investor, what percentage of my attention and money should be in the private markets on secondary? What do you think? Like, are accredited investors, maybe individuals, are they dramatically underinvesting in secondary markets? Is there any risks to be aware of? Should I just go in and buy 20% in secondary? Like, what should I be thinking of? Because it's a relatively new proposition.
Private markets, actually, it's an amazing question. Like, it's a really good question. Private markets, highly liquid still. So when you're investing, imagine that you're investing right now in a company. When you're investing, you have to take into account the illiquidity premium. So I give you two options, okay? You have an option to invest in a startup, like a blockchain startup or a private company, and you have an option to invest in a traded company or even like a bond, okay? So with a traded company, things go south, you sell. Or you can take this money, put it in NVIDIA, everything would be great, yeah. In a private company, you're stuck, right? Like there's the level of liquidity in this market does not exist. So you have to calculate the liquidity premium of your investment. And I guess for many investors, only like a percentage of their entire portfolio would be in alternative investments. Alternative investments is like a name for private markets, real estate, startups, and so on. And most of the money would probably be in traded markets, unless you're a venture capital, which is like highly risky, investment vehicles.
Okay. So convince me that I should invest in the secondary market. Why is this worthy of my time and everyone's time to dive into Simetria or some other company and like start investing in secondary, assuming I have no experience doing so, but I have decent experience investing in public markets and investment brokerages and that sort of thing?
So I'm not going to convince you to invest in anything or the secondary market. I'm here just to say that, first of all, like there's a lot of opportunities in the secondary market, for sure.
Yeah. Not financial advice, just like making the argument.
No, not financial advice.
Yeah,
what I can tell you again, like I want to point out the problems and opportunities, really, without saying financial advice or any disclaimer. The opportunities is looking at technology that is emerging. Let's say AI, for example. Okay, all those opportunities are in the private markets, right? You don't have enough like AI companies traded because this is very new technology. OpenAI, for example, is a private company. So if you want to invest in OpenAI or want to invest in new technology, the private market is the only place where you can do it. And you mentioned secondary market. Secondary market, investing through secondary market, it's like cheating because you're not investing directly in the company, you're buying from someone else. So you have an opportunity to check from the outside and maybe even like secure some kind of a discount on the secondary market. So there's also opportunities in the secondary market. And putting the opportunities aside, the problems are something that has to be solved. So the problem that as an employee, you have a problem to access liquidity. As an investor, you have a problem to access liquidity. The way that liquidity is managed within the company, it is something that has to be solved because it's just the way that it works right now. It's not efficient. And the second thing is the way that those transactions are settled. So like right now, what happens is that if you're a buyer and a seller and they meet together, the time which takes from agreeing on the price to you actually owning the company, the shares, and me owning the money takes a lot of time. So at Simetria, we're also develop a solution to provide settlement in private assets, which is very efficient, and we hope that it can unlock a lot of value. But again, like there's a lot of people that have been trying and failing. There's a lot of companies, they're in very large companies, but everybody recognized that the opportunity is there, that this is most of the market. And I think the prize is really big. So if you can unlock this problem, if you can provide a solution to this problem of assets being not traded and so on, private assets, then you can unlock a tremendous amount of value. You can be bigger than most of the traditional stock exchange.
And do you see one of the competitive advantages that you might have being in Israel is that you'll be focusing on different countries earlier? So I would imagine you have to go country by country to unlock the potential to trade secondary. US is a big market, but there's many other big markets. I'm sure other companies are doing this as well, allowing secondary market trading. Are you taking a different tactic there on launch strategy?
Yeah. So again, a great question. The thing with trading securities is that you have to be regulated. Like there's no question about it. It's not like, am I a security token or utility token or whatever? Right. You have to be 100% regulated. The solution that we found is that we're partnering with a regulated securities exchange. So we partnered with German exchange, Swiss exchange, Canadian exchange, a Singaporean exchange, and a US exchange. In the US, it's called ATS, and in the Europe, it's called MTF. And what we offer to those guys, we offer our technology with our trading board. We have a trading board that we developed and a settlement solution and a package that has all the assets. So companies, already brokers that list in companies' assets, want to buy or want to sell. So if you plug into our API, you're immediately getting like your own secondary market. And since you're, let's say, situated in Canada and you're licensed to provide trading services in Canada, then you're marketing those assets through your own licenses. And this is how we solved like the license problem of being regulated in one place and offering the assets in many places in the world. And the next phase of what we're doing is trying to solve or provide a solution where those assets can be traded and settled between the different exchange. So the Canadian exchange and the German exchange could settle transaction between them. So a Canadian investor would go into the Canadian exchange, which is regulated, see an asset that is listed on a German exchange, and then buy. And since the German and the Canadian exchange that we partner with, Finhaven and Swan in Germany, are both blockchain securities exchange. They both use blockchain technology. So the settlement between those exchanges is much swifter. It happens very quickly.
Interesting.
So eventually, like where we heading is, or where we want to find ourselves, and I believe this is the solution for the private market problem that we said before, is that all of those exchanges would be interconnected. So all of those global exchanges would be interconnected, and liquidity and assets would flow from one exchange to another, and the underlying technology would be blockchain for all.
And you see the current problem today is technologically integrating the different networks across different countries on the public markets, as opposed to regulatory?
I think, I don't think there's actually a problem. Like, I think that there's several solutions out there, and I think that it's a challenge, but it's not a problem. Like, I think that's something that it's really solvable. This is like what LT technology is designed to do.
Awesome. Well, where are you guys? How far along? You started about 3 years ago. How many people have you launched? Are you like pre-revenue, revenue? Can people try it out?
So we post revenues. We're post revenues. We've actually, like, this month we closed $7 million in deals. Still small, but it's exciting.
Yeah, sure.
We had launched 2.5 years ago. When we launched, really 2 months after we launched, we got like a regulatory permit in Israel to operate our exchange. And the first product that we launched before the exchange was this tender management, this system where employees can sell. It was really came from a place where we wanted to unlock this value for the people that are actually building companies, not only investors, but the founders, the employees. So we built this platform where the company can offer people to sell some of their shares. And we had some success with this. We had 2 very large companies that signed up with us. Then when the current financial crisis hit, like, it's kind of the demand for this product a little bit diminished. And we continue with our plans to launch this global exchange. We're planning to launch this next month as a bulletin board. So bulletin board is like a communication system between buyers and sellers. So we won't have settlement at first phase, but down the line we'll introduce also settlement to this bulletin board exchange.
Nice, awesome. And where are you guys in terms of what you're looking for? Are you trying to raise money? Are you looking for customers to do secondary trading? What else?
Yeah, we actually, like, we all the time, like, we find like amazing partnership, and we're always looking for partnership. We're examining partnership right now. Like, I'll give an example with a very large cap table management provider in Asia, which is the largest in Asia. So they do India, Singapore, and Malaysia, and so on. But there's a lot of tech. So we're providing them our tech, and there's a wonderful synergies between what we do and what they do, because we don't have a cap table management solution. They don't have like a secondary solution. So there's a wonderful partnership there. There's a wonderful partnership with all the digital securities exchange around the world, because from day one, we bring them billions of dollars in assets. So those are small exchanges. They're looking to have trades happening on the platform. So we're introducing trades we have a lot of assets that are listed with us. So we're introducing them to other exchanges. So there's a potential for them. So we're looking to partner with small exchanges, not the NASDAQ and so on, but like the small ATS, MTS,
smaller,
that are looking for assets mainly. And there's some other great
Okay.
partnerships.
Yeah. So anybody out there who's listening, that's a small data exchange. Sounds like you're looking for partnerships primarily. Awesome. Ziv, I really enjoyed speaking with you. Congrats on all the progress, and hope to do some secondary trading on Simetria someday.
We have, by the way, we have about 20 blockchain companies listed with us, secondaries in blockchain companies. It's a very interesting space because it's the only secondary where you can get actually warrant for a token with a secondary. It's not only like equity that's selling, but it's also some warrant to buy tokens of the blockchain company. And there's blockchain companies which are so high in demand, which is impossible to get any allocation in. And there's some that you can buy some allocation in, which I believe could explode in the coming years. Mm-hmm. So I would suggest everybody to look at secondaries also in the blockchain space, cybersecurity, quantum computing. You can find secondary opportunities. Yeah. So really interesting space.
Cool. Well, thanks again. I enjoyed talking, and I'll talk to you soon.
Okay, thank you.